Take a drink. Take a drink of my coffee.
Hello, everyone, and welcome back. Oh, sorry, Brian. Didn't mean to introduce your first sip there to Stateside Residential Market Report with Bryant Naylor and Tim Robinson. Bryant has coffee. My house is completely out of coffee. I just found out, and I am struggling, but we're glad you're all here to learn about investing, which we're going to talk about today. Bryant, how's it going?
I'm doing great, Tim. I got my coffee. It's a beautiful
I,
day.
I noticed. I noticed.
And yeah, I can't nothing to complain about.
Yeah, I have
How are
everything.
you doing?
I'm tired because I don't have coffee. But we're going to work on that. We're not going to bore people with those details anymore. Today, Bryant, we've decided to talk about finding opportunity in every market. We watch these videos occasionally. Hopefully, some of you watch them occasionally too, and see that we are it's too crazy, it's too competitive, and there's not enough inventory. All true. I mean, we're not going to say it's not true. However, we're going to flip the coin and see people are still buying. I have investors still buying. I am constantly looking for deals myself to buy. So I think that, a good friend of mine the other night said, you marry the property, not the interest rate. I mean, if you find the right property in the right area, and obviously find the right tenants to put into that property, if you're a rental property investor, that's what you're doing. I mean, interest rates will fluctuate. The principles of real estate investing are still sound, even in this market with the crazy competition and things like that. So I think what we're going to talk about today is where we can potentially find opportunity, even in a very low inventory, tight, competitive market. We just have to work a little harder. I mean, that's what it boils down to, and that's what we've been saying for over a year. Is that you have to get a little creative, and a lot of folks are sitting on the sideline right now. And when that happens, that's when opportunity arises for the savvy investor. So let's talk about some ways that you can be savvy investors. And this is obviously not necessarily on, I mean, this can tie into primary residence buying in terms of appreciation and, numbers wise, but we're more talking about investment right now and some things that you can do to make sure that you're not just sitting on the sideline waiting for something outside of your control, being the interest rate, but controlling things that you can and looking for opportunities where others might not be doing that. So, what do you think, Brian?
Yeah, yeah, all good stuff there. I'm sorry, I just like lost my train of thought. I do. You're right. Everybody, there are people in the market that are everyone's looking. People are looking to buy. There are savvy investors out there that are finding opportunity. I have a client right now that shot me a property yesterday and said, "Hey, what do you think about this one? The garage has a upstairs space that I can convert into an ADU, like an additional dwelling unit.
Yeah.
For those that don't know what ADU is, and those are different. Looking at it differently, not just like, hey, how are the numbers going to work? Just renting this place out. He's like, well, how can I rent out the house and get the garage rented out upstairs as a little tiny apartment, maybe a short term rental. I think, including myself and a lot of people out there, got really spoiled over the last 10 years with the
For
way interest
sure.
rates and the way the housing market has been with buying investment properties or getting, helping people find and buy investment properties. It was almost too easy. And
Yeah.
now that it's more difficult, a lot of people are standing on the sideline waiting for the market to get easy again, and it's not going to get easy again for a long time.
Yeah.
It's just the reality of it. You're gonna have to get creative. There's no more 3% rule or 2% rule,
No
1%.
more 1% rule.
You're
No.
yeah, you're lucky to even get 1% rule right now.
Yeah.
But what people need to think about is, and this is what we do when we send out our investor emails. So if anybody's listening to this that wants to get on that, we do round up properties that we analyze and determine if we think they'd be a good rental property or investment property, and we send those out to a large list of potential clients or potential buyers on our investment list. We started including a 5-year outlook on those emails
Mhm.
because what we were seeing was when we were looking at just the 1 year numbers, they weren't very good. Like
Not exciting. No.
trying to sell somebody on a property that they're probably not going to make much on their first year, potentially not even make, like they might be underwater a little bit, but you start looking at those 5 and 10 year projections, and that's where the money is. That is where, real estate, like I say it all the time, real estate's a get rich slow game. And
Yep.
people have forgotten that over the last decade.
Yeah. No, I mean, everything you said, totally true. And I love it. And I think that, So we could spend episodes and episodes talking about creative financing strategies to get in on better deals, but I'll just, throw a couple out for people to research at home. I think, with the great rate lockdown, they're calling it, people are locked in at, 50% of mortgages or 50% of houses in America are either paid off or under a 4% interest rate. Is that really loud? Is that a trash truck outside my house? Is that what your
What
face is
is
doing?
that
It's
noise?
it's either a trash truck or an armored tank coming down my street.
It sounds like you're breathing in your microphone. It sounds like that. That's what it sounds like.
We're leaving it all in, folks. We're leaving it. This is just, recording in everyday life. We're here to provide value. I'll talk louder. Can you at least hear my words?
I can hear you better. Yeah, you
Okay,
sound good.
see, it's gone. We're not being invaded. That's good. Um, but with this great rate lockdown, I mean, one of the biggest assets in America right now is this low rate, long term fixed debt. So if you're looking around, don't be scared to ask. Don't be scared to have your agents ask sellers if they're willing to do seller financing. If they're locked in at 3%, but don't want the headache of being a landlord anymore, if you go in and offer them 4.5% for 30 years, you take the management off their hands. They're getting more of a return than they're paying out. There's all kinds subject to, there's all kinds of like no money down deals where you can still make the delta between what their interest rate is and what you're going to be paying them, and then you charge the tenants more. And I mean, there's all kinds of creative things. So I would encourage everyone that's listening to research in more detail that we can get into now. Seller financing, tanks invading Silver Spring, Maryland, crash trucks going by, subject to all these different things where you can get into the creative financing game. Talk to our lenders. I mean, talk to Liz over at George Mason. Talk to Aaron Johnson. These folks that have very creative financing products that you can get in on. 7-1 arms and variable rate interest, things like this. You just have to do good underwriting. I think that's one of the main things to
That's what I was going to bring up.
underwrite it well. Do not have lofty numbers are fine, but be true to yourself. I used to do this when I first started investing. I'd be like, well, if I don't pay for lawn care, then I'll make $60 more a month, and then it works. And I was like, what am I doing? I'm
I'm
playing
not
with
going to do the
myself.
damn lawn
No one
care.
else cares.
Yeah,
I'm paying for this house. I'm getting the returns. If you fudge your numbers, you're only hurting yourself. Don't do that. Be
exactly.
very realistic. Be very conservative. Make sure you have cushion. Make sure you have reserves. All these things are super important. Um, what was I going to say? Oh, I really think there is going to be a lot of opportunity over the next few years for folks that are locked in sub 4% that realize they don't want to be landlords, or they're retiring, or they want to put their money into different asset classes to really utilize the seller financing to get into good deals.
Yeah.
So I think that's a really good one to see that fixed long term interest rate at a low percentage as an asset class itself, because I think that's already 8 minutes, Brian. But
Jeez. We have
yeah,
to talk a little bit longer.
we do have to talk a little bit longer. This one's gonna be a long one. Hang out. Yeah. So I really like that, and I think that honestly, like as I've been investing for a while now, and the first year is literally always the worst. I've never had a property where I'm like, man, that first year was killer, and it's just gone downhill since then. That has not once happened, and I own multiple properties. It is always hard the first year. You're finding problems, even if it's a new build. You're finding problems that they didn't see in the inspection, or if it's an older build, you're fixing deferred maintenance that no one took care of. You're getting to know the tenant. You're getting to know your property management company. You're understanding the cash
Yeah.
flow, when things go out, the tax structure, the insurance, all these pieces. You're just kind of like inundated with these things. And after the first year, sometimes two, you start to see this is what I wanted. But it never happens in the first year, ever. It just doesn't. There's a lot of moving pieces. There's vacancy, there's turnover. As you start to get in the groove with the property manager and know the property well, year 3, 4, 5, they start to take care of themselves. There's stuff that happens. You have to fix a dishwasher. You might have to fix a roof, but
Right.
hopefully in your writing you accounted for that capital expenditure. There's all
Hmm.
these things that play together. I'm saying all this to say 5-year projections at least is where it's at.
At
This
least.
is not crypto. This is not a what was the thing? Was the little digital art NFTs? This is not an NFT where you're hoping to just buy it and
This
tomorrow it's worth
isn't a board ape.
$50,000.
This is a
Right,
board ape.
right. Yeah. Like, so this is something that you were in for the long term. I mean, real estate is a very illiquid game. Anyone that says differently is just incorrect. Like, you put a lot of money into an asset, and the only way to get that back out is to sell or refinance. Maybe take out a HELOC. This is a lot of money you're committing, and you can't expect it to just start, printing out money on a monthly basis. It gets better with time.
Yep.
Rents go up. The interest rate starts to go down. You refinance, you pull out money, buy another property. This is hard to cover in a 10-minute video, but like these are all things to just get the juices stirring for folks that investors that have been sitting on the sideline saying, I can't pay 7% interest. Think differently. Like don't think again. Just think differently. Look for different opportunities in different asset classes, different ways to approach purchasing properties, and stay in there. Like it's one of those things, and this is what I tell my investors all the time: stay in the game. Like I'm always looking. I'm looking for you. I'm looking for me. Like there are deals happening, and people are buying.
Yeah, and I will also I'll add to that is I think educating on people on what seller financing means is one thing, because a lot people think, oh, seller financing, that sounds like, I don't even, like, made up. Like, it doesn't sound like it would be hold up in the court of law. Yeah, like if you don't pay me my money, it's just gonna, I'm screwed. But it's a solid contract that is definitely legally binding by the law,
Yeah,
which again I think is something that people need to understand, that it is a legitimate way to buy a house, seller
100%.
financing.
And it's tied to a hard asset. It's tied to the house.
Yep.
Like that's the collateral. And these are all in. Honestly, you get into I don't know, murky water in the real estate industry because there are a lot of con artists. There are a lot of scams. There are a lot of faulty contracts. There are a lot of get rich quick. Anything you hear get rich quick in real estate, run away.
Walk away. Right. Yep.
Period. Run away. It is a scam. It is a con. But there are creative things that people have been doing since real estate's been a thing. It's all about problem solving. Like I have a problem. I don't have the money for a down payment, but I really want to get into real estate. You have a problem. You own a 6-unit building that you no longer want to manage. You want to get a boat and just sail off into the blue. I will buy this from you with no money, but I will pay you every month more than you have to pay the mortgage, right?
Hmm.
Or you own it outright. What are you looking to get in the stock market? 5%? Great. I'll give you 5.5 indefinitely to own this property. We write up a contract. I own the property. You finance me. You are now the bank. Everyone wins. Problem solved.
Yep.
Does it happen on every deal? Absolutely not. I mean, maybe under 5%, maybe under 1%, but you have to have that conversation to find out. And these are conversations we can have. So if you can match your problem and solve someone else's problem at the same time, I mean, that's where a great deal is made. Everyone wins. So yeah, I mean, again, all this to say, and this is the topic of multiple books. All this to say is just think a little differently. It does not have to be cut and dry, like wash, rinse, repeat. I buy a house for 3% down or 3% interest, 20% down. You pay me $200 a month. I do it 50 times and I'm retired. It doesn't have to be that. Like let's think a little differently. Partner up, partner up. That's a huge one.
That's what I did. Yeah.
Yeah, there you go. Like if you don't have the down payment or you want to put less in, I mean, trade your equity for someone else's or trade your time for someone else's equity. Like if you're handy and you can, swing a hammer and paint a wall, do that. Use someone else's money to get a down payment on a house. Split it however you want, whether it be, recurring cash flow, whether it be a payback with 7%, whether it be a payback with 15%. I mean, the good thing about partnerships is you can literally structure that legal contract however you want.
Hmm.
It does not matter. Whatever works for every party involved, that's what the contract is, and then it's legally binding. So figure out what are the needs again. What are the problems that need to be solved? I have tons of time but no money. You have tons of money but no time. Let's match those and see how we can both win on this. So
Yep.
think again, just think differently.
Yeah. And
If this is something you're interested in.
yeah, and I'll add one last thing is, right now in this market with the high interest rates and a lot of uncertainty, I would not get into anything that is too like a flip right now, unless you really know what you're doing.
You have to be
Because you might you might be able to buy a flip for a good price right now, but in 6 months, by the time you get it back on the market or you're going to sell it, now home price, we don't know what home prices are going to do. They might drop 10% and then you're underwater on this thing. Like at the end of the day, you just hold on to it, refinance it, hold on to it and keep it. But that might not be what you want to do. And then suddenly you're stuck with a rental property and you wanted to just flip. So I would say the market is a little unstable right now for someone who's going to go out and look for flips that doesn't have experience doing that. So I would say long-term buy holds with seller finance or other creative financing is something you should definitely be looking into right now, and underwrite very conservatively.
Yeah. No, I think that's a great point. I will put one caveat on that is it could be a fantastic time to do a long-term live-in flip. So if
For
you're
sure.
going to buy a property, like we're always saying, look at the ugly houses. This is a great time to find an ugly house, add value to it while you're living there, one room at a time, upgrade slowly, live there for 2 full years. you can sell that thing and keep all the gains if you're single up to $250,000, or if you're married up to $500,000. So if you want to live there for 2 years and put in sweat equity while you're there, this is a great time to do that and build wealth that way. So yeah, it's all about. I mean, again, all this goes to show that in different markets, you utilize different strategies, and they could be very niche. Like not everyone wants to move into a house that's ugly and redo it while they're living there. I have two small children. I could think of 1,000 things I'd rather do than try to do that right now. But for someone, single person, young couple with kids, I mean, some people do it with kids. You have to figure out what works for you, and is it worth it? Is the juice worth the squeeze? If you can buy a house in DC for 550 grand, live there for 2 years, put in $40,000, and it's now worth 750 because of appreciation and the value you've added, a $200,000 swing in 2 years is absolutely worth it to most people.
Yep.
So, I mean, these are theoretical numbers, but pretty close.
Yep.
And yeah, go from there. I'm talking too much, man. I get fired up about investment.
I do too. And actually, I was just thinking maybe on the next, we can write this down on our little new spreadsheet we have.
Ooh, we have a spreadsheet. Do you hear that, folks?
Talk about now I just lost my train of thought. House hacking.
Yeah, dude, that's a good one. House hacking is excellent. All right.
That's one thing I wish I would have done when I was younger.
Yeah, quick side story, and then we'll leave you alone. I was on a panel the other night downtown with a commercial broker and a CPA and a property manager, talking to a bunch of new investors. And I talked to this one young lady, 22. She's a commercial broker. Like, she graduated college and just went straight into a job that doesn't pay you until you close a deal. I was like, you're awesome. But we started talking, and she's like, well, I'm renting with some friends. I'm like, stop. What you need to do right now is talk to my lender friend over there. Talk to me. We're going to find you a multifamily or a 5-bedroom house. We're going to find a way for you to buy that house with 3.5% down, and you're going to rent out all those rooms to your friends. In 5 years, you're going to be light years beyond all your friends in terms of financial stability. Period. End of discussion. I think if I was young and knew about house hacking, my world would be very different.
Same here. The more
people that can find out about it at 18, 19, 20, 21, if you can live in a house and have your entire mortgage covered by roommates, or even the bulk of it, that wipes out every single person in America's single biggest cost of living is their housing.
Yeah.
It's across the board. If you can wipe that out at 21,
yeah,
you're done. Do that. Move to keep this house, move to a new house next year, do it again, do it 2 or 3 times, you're set. Like, it is that simple. So yes, house hacking. Let's go.
Next episode. Right.
Next episode.
We're all fired up about that.
Yeah, man, I'm telling you, they need to teach it in school. But if they did, then everyone, I don't know. Not everyone would do it. It's still risky.
No,
but
yeah, it is. Yeah, not everybody would do it because
we have a spreadsheet. I'm gonna shut up. All right.
All right.
Thanks everyone for tuning in to a longer than usual episode of
With Coffee.
With one half of us having coffee, the other of us angry at the other one. We hope this has been enlightening. If you have questions, please reach out to us. Like, I will talk this stuff all day. Bryant will talk this stuff all day. I wholeheartedly believe that real estate investing is the single best way to change your financial outlook in America. I think I will always think that, and I will talk about it all day long. So reach out to us. We'll help you do it. Until next time, I'm Tim Robinson.
I'm Bryant.
We're still working on the
You're supposed to get that part.
Sorry. Tim Robinson, Bryant Naylor.
Right again.
Stateside Residential. We'll see you next week.
Thank you. Bye, guys.